Hey, what's going on, guys? This is Greg with Idea Trading Ideas, and today we're going to be talking about AT&T. And as you can see, we have AT&T up on the screen for our MSN money, right? So AT&T Inc. currently valued at $25.26, down 29 cents at close, nothing after hours. And what we're going to do is kind of scroll down really quick, kind of show you the charts. See the one-day chart. Kind of started up here 25. We kind of made a high at 25.50, and then we kind of shrugged all the way down to 25.16. Right, so days range 25.15 up to 25.52. 52-week range 25.01 to 33.88. Previously closed at 25.55, open at 25.36. Volume is 54.21 million. Average is 44.92 million. Market cap is 180 billion. Shares outstanding is 7.14 billion. EPS, earnings per share, 0.12. PE is going to be 221.92. They're not showing EPS for 3-year growth. PEG ratio for dividend yield is going to be 2.08% or 8.14%. And one of the things that most people like to take a look at is analyst recommendations, right? We have a whole recommendation based off of 31 analysts, and this was placed on 10/28/2021, right? So strong buys, we have 2. A buy, we have 7. Holds, we have 18. Sells, we have 3. And strong sells, we have 1, right? So as we scroll down a little bit, 12-month price target is $31.12, and EPS estimate is 3.36, right? So what we want to do is just bring in a quick video to show you what's going on, what Jim Cramer thinks about AT&T. Clicking on play.
Start with AT&T.
Okay.
It's a name you don't like for
No. I said I don't hate it anymore. I just don't find upside. But David,
there is a little bit upside this morning.
Yes, David, I'm going to give you
stock. Obviously, it is
1.2 million wireless net adds.
Yes,
very good.
928,000 postpaid for AT&T, which is a strong number. In fact, far stronger than Verizon's number that we got a few days ago. We all know about the promotional nature of things, but AT&T, sort of the CFO telling me in a call earlier that it's not really as much about that. It's simply about what they say is executing better on wireless.
But David,
and taking share potentially.
That's the we have to talk about this 289,000 net adds in broadband. David, has it become just a free-for-all in broadband?
Well, they're going to, on the call, which I think is underway, they're going to be talking about their accelerating build-out, for fiber, which of course then gets to the broadband.
I'm willing to say that's bullish.
That has weakened, as you know, shares not just of our parent company Comcast, but as well Charter, and even more so, of course, the much smaller Altice. This idea that AT&T in certain markets is going to become a more formidable competitor as it overbuilds with fiber. And they say, at least, when they do that, they take share where they build.
Well, they have to by nature.
Yeah.
David, this is the nightmare coming true. And so we're all going to ask about who needs to do deals, whether this FTC will allow deals. This is arguably, I know this we work today, but this is arguably the most important earnings story out there. And I'm willing to give you that this is a better than expected quarter, and it is taking share from people.
Yeah.
And maybe it's not Dumb and Dumber anymore. My friend John Ledger was talking about that yesterday. But we've got Maurice Claret across the street. We have the whole gang.
Marcel Claret.
Marcel Claret, by the way, was being interviewed by another person.
Yes, he came down from the NASDAQ. It's amazing how he could do that, wasn't it?
Yeah.
We're here, but he came down.
It's Andrew, and we
love him.
We do trash.
We love him, but he's
David, this AT&T is really important because I've been very negative on them, and I'm willing to say this is the bottom, and that the focus that they did here, I'd like to know how much was done with subsidy. It also makes me feel like perhaps this is a clarion call for knowing more about Apple.
Interesting, and it may be. Now, we'll see. This stock, as you point out, Jim, you've been right to be negative on it. It's still down 10% for the year.
Yeah, but I'm not going to be.
Listen, it's going to be a far smaller company, AT&T. We can't say that enough, of course. And their key contention for why they are jettisoning, so to speak, either splitting or spinning Warner HBO into Discovery is because they want focus. And so they're going to continue to talk about the fact that they are now going to be able to execute on a higher level as a result of the focus solely on the wireless business. It's a good quarter. By the way, though, I did want to turn to actually that name, Discovery, because take a look at how that stock has performed since the deal was announced. It's been nothing short of just horrible. And I think we have that chart as well. There it is. We're talking about a stock that's declined by over 28% since they announced the deal. And there just seems to be, because this is going to close most likely, perhaps even in the first quarter, but certainly the first half of next year. And there are a lot of investors who just don't want a part of it because they're worried about the leverage at the company 5 times. Remember, it'll be one of the largest media companies in the world. Obviously, have a direct-to-consumer will be its primary focus, but it still has a lot of linear networks. And with 5 times leverage and linear networks, there still seems to be some resistance, despite what I believe, obviously many others do, will be strong leadership from David Zaslav and an increasing management team, that it's going to be tough. So, you know, AT&T is jettisoning a lot there to create value, so to speak. 70% of this company is going to be owned or controlled by former AT&T shareholders. We'll see, Jim.
Well, I mean, look, remember that a lot of times we have to think about who the shareholder base is.
Yeah.
ATT was for dividend, with slow growth.
Right.
Verizon is for a little lower dividend, a little faster growth. T-Mobile up 5 yesterday because they've got the fastest growth. And we are in a market, David, where even though interest rates are low, the individual investors are addicted to growth, not dividend. Highly unusual. So the idea that maybe AT&T's on restart mode and we can start looking at it again is exciting to me. I'm excited about that.
Well, that's by far the most positive thing I've heard you say about AT&T since the deal was announced.
Okay,
and you were very, very angry, rightly so, perhaps, because you were misled on the dividend. Period.
And I think misled's the right word.
Yeah.
I'm not choosing the word dissemble. I think that's just misled. But when I look at this, I say, you know, is it a star that's born? No. But I would say, wait a second. They're not an also-ran. But the whole group seems a little less investable if you're in that broadband's been the power.
And the name, the best name, so to speak, at least over any period of time, of course, has been T-Mobile. Right. And we haven't heard from that company yet.
No,
so
not at all.
It'll be interesting to see in terms of their postpaid net adds.
Siebert's been putting up good numbers.
Yes.
Not as promotional as Leisure.
No. They do have a different, I might argue, a stronger culture in some way at T-Mobile, yes, having seen it to a certain extent first.
So pretty much see what Jim Cramer thinks about AT&T, what's going on with the mergers and what they feel about the dividends. We know that dividends are going to be cut pretty soon. I think anywhere from, it's going to go from being in the 60% range to the 40% range in the near future, maybe on next quarter. But I think they are paying out regular dividend on this current quarter. So I just wanted to bring you to our AT&T chart really quick and kind of show you what was going on in 2020 and the highs and stuff like that. So we'll kind of open it up a little bit more so you can get a better understanding. So red lines are going to be our resistance lines. Blue lines are going to be our support lines. So back then we had highs of about $39 plus in 2020 before the pandemic. Then pandemic happened. We see, bam, it shot down to those lows of about $26 and some change. And it kind of gave us like a whipsaw effect in a sense. It went up to about 33, then it came down again to one of the lowest points, which is about 26. And now, hey, we're at $25.26, somewhere around there. So I'm going to move back in time to kind of show you exactly what was going on in AT&T or with AT&T years and years and years ago. So back in 2011, we see that we have lows of about the same range. Actually, we're gonna go back to 2010. We have lows of about 23.78, right? So 23.78, current priced at 25.26. So we're pretty much sitting right around a support area and really a resistance area. So we're like sitting right down on top of that. Any breakage to go below this, we could possibly hit that 23.78 range. Hopefully we don't go lower than that. We don't really want to see those 2009 prices or 2008 prices. Is just way too low. So we hope that AT&T doesn't drop that low. But right now we are around in that area. So even if we are in close to that $23 area, we can take a look at the highs of AT&T around that time frame, and we still were right around the $29 area. So it's a possibility that even if we do drop down, we can still see that $29, $30 area. But just looking at 2011, you see it never dropped down that low as in the price that we have right now in 2011. 12, 13, 14, still pretty high. 15, 16, we never saw those numbers, right? We didn't start seeing those numbers again, even in the $26 range until 2018. And then we quickly made up for that and went higher into the high 39s. over in 2019 before seeing what happened in 2020, right? So just looking at the 2021 chart, which is right here, we could pretty much say that, hey, 2021, our high was probably about $33 before looking at this big candle right here that brought us down to about that $28 range, and then making our way back up, and then slowly but surely going down. We're going to hit the X mark right there. So we're down pretty low. Our goal, hopefully, by the end of the year is to get AT&T back up in the $27 range. I would hope that we be back up around that range by the end of the year, because it's going to help our shareholders. It's going to help me as well, because I do own option contracts, 10 option contracts in the AT&T. So this is my hopes that AT&T is back up in the $27, $28 range, because that will be good for me and good for others as well, right? So what I want to do is kind of move forward into our Robinhood account, kind of show you exactly what's going on. So $25.26. I'm going to go through the charts really quick. Weekly chart says that we're down 17 cents or negative 0.67%. 1 month chart says that we're down $2.02 or negative 7.42%. 3 month chart says that we're down $3.11 or negative 10.96%. 1 year chart says that we're down $1.48 or negative 5.53%. And the 5 year chart says that we're down $11.25 or negative 30.81% over the last 5 years. As we scroll down, you see it says options, strategies 2, value 717, today's return negative $72 or negative 4%. Total return negative $1,189. We're down 62.38%, right? And we have $100 cash collateral because of our counter that we have in place, right? So just gonna give you or show you exactly what's going on, what we've been doing with AT&T. We're gonna go down to our history really quick to kind of show you that we have been picking up a couple of dollars. We had a covered call sell right here. We picked up $50 on that. We did a buy call, ready to buy back a contract that we had. Our 10 contracts that we had, we bought it back at $30, and then we decided to put it back out for $50. So we want to make more money in that time frame. So we picked up an extra $20. So we're just doing the math, making sure that we came off ahead. But as time has went on, we probably have picked up anywhere from $200 to $300 from AT&T doing our cover calls. So even though we say that, hey man, we're down to $1,189 for our 10 contracts, we actually aren't down that low, right? So we may be down 900 and some change, 800 and some change. And we really have to try to figure out what way we, what we want to do in order to close the gap of being that far behind, right? So one of the ways to close up the gap is just to buy another 10 contracts at the current value. So what we're going to do is click on portfolio, scroll down here to AT&T. Remember, we got in at $27. That was our price that we said we're willing to buy it, and now it's way lower than that, right? So we have the option to buy at 27. Now it's at 25, so it's way lower, right? So now we are out of the money and not in the money like we were before. So average cost was $1.99 per share. Our break even was $28.99. So basically $29 was our break even. We own 10 contracts and it expires June 17, 2022, right? Cost us $1,990. $1,990, right? So today's return, negative 80, total return, negative $1,180. So once again, what's our plan? One of the things that we could do is buy another 10 contracts in order to cut this price, $19.80, or actually cut our average cost down in half. So when I say down in half, it's going to be in half of the $19.99 and the $810 or $81, right? So it's gonna be $810. That's different. So the difference in between those two numbers, right? So in that case, 81 cents between $1.99. So we're gonna be looking for a difference in between that. And I'm gonna say maybe the middle area, maybe around 114, 115ish. I'll just say that. For right now, I haven't did the math, but I just say 114, 115ish, which means that we'll be in for 150. If we say 150, our average cost would be 150, but it will be for 20 contracts, right? So we'll be in for basically $3,000. So we would have quite a bit of money that will be pushed over into AT&T if we decide to make that particular deal. But it also would lower our total return, we wouldn't be so negative. We can actually make moves now with 20 contracts, but we also have to keep in consideration that, hey, June 2022 is coming up really fast. So we really need AT&T to go up in value at a faster pace in order to kind of close that gap out. So we want to really risk another 800, 900 bucks trying to close that gap in AT&T. That's something that we have to do the math on, right? So any of you guys that actually own AT&T, that you just own the shares outright and you're kind of afraid of, you know, the dividend cuts, and that's how you've been getting money, and you own 100 shares or more, honestly, I would tell you guys not to really be worried about it, you know, because if you own 100 shares or more, you can come over here to AT&T and you can do option trades if you have option trading capabilities turned on, and just do a cover call option trade, sell call. And let's say you bought 100 shares right now, it costs you $2,526, right? And I want to do the math real quick just to make sure I'm right. 2526, so 25.26 times 100 shares. Oh goodness, how did I mess that up? 26 times 100. Yeah, $2,526 or what is what it will cost you right now, right? So if you decided to go ahead and just pick the $26 strike price, that's you saying, hey man, I'm willing to sell my shares off $26, right? And that's by November 5th. Do we think AT&T is going to drop from $25.26 to $26 by the end of November 5th, next Friday? The answer to that question is probably not, right? It's not going to make that jump. But we can make $6 times 100 shares. So we can make $6 back from it. 6 cents times 100 shares. We make $6 from that particular deal for those of you who only own 100 shares. So once again, when we start looking at AT&T dividends off of 100 shares currently, maybe you're picking up $50 for the entire the entire time frame, maybe, right? Maybe $50 for the entire time frame over the year's time. But you're picking up $6 just for a week. So as time goes on, if you went 6 times 4, which is 4 weeks, you're picking up $24 in a month time frame. So in a 2 months prime time frame, if you were able to keep that $6 going or pick up even more, you would, in a 2 months time frame, almost overshadow or be close to what you would make for a whole year for AT&T. So that's just in 2 months time frame. If you decided to kind of bypass November 5th and just went down to November 26th, you can see that you're gonna not make as much money as you were thinking about, but you could go with 26 and they'll give you $23, right? That's on you. $27, $8, not a lot of money. So it's better to go with a weekly movement with AT&T as the price goes up or goes down to guarantee you a little bit more money. So I wouldn't go with a month out at this particular point. So anyway, hopefully I help you guys out, see a clearer picture of what's going on with AT&T, especially guys that are dividend investors. Hey, I don't own any actual shares of AT&T. I only own options, and I only tell you what I'm actually doing with my own money, how I spent it, and what's going on, right? You see that I'm negative when it comes to AT&T, but hey, Jim Cramer and other analysts feel like, hey man, AT&T has already hit their bottom. They don't think it's going to go lower. I think that, hey, it's a possibility that we could see it go lower. I don't want to see it go lower, but it could. And we obviously, analysts believe that within the next 12 months that AT&T could go to $31. It is my hopes that with all these things that they're doing, that we could see it by the end of the year, make it up to $27, $28, and we will hope by the first 2 to 3 months or first quarter of 2022, AT&T is back up to that $30 range. Hopefully it doesn't take the whole year of 2022 to make it all the way back up into the 30s range. I hope that first quarter we see it's back up in the 30, 31, even higher. And then so we can go ahead and get off our contracts, make a little bit of dollars, and then move on to looking at actually owning the shares if they decide to drop back down. So hey, that's my take on AT&T. Hopefully you guys learned a little bit of something. Please like, comment, subscribe to the channel. I really do appreciate you guys looking at the videos and watching us. Hey man, have a good one. Bye.